model. And so the triple X model allows me to catch not the entire move, but it allows me to catch a piece of this move, right? So Tuesday, the 7th of October was a very, very large sell-off, but I'm going to explain to you why it was easy to catch and why it was predictable. Okay, so if we start here just by looking at Tuesday, the 7th of October, right? I'm just going to draw things back to just before the market opened, right? So this is about 9:30 or 9:25 Eastern. Now, when we come to the markets, we want to look for three things, right? I have a triple X model, which I use every single time. So I want to know where I'm trading from. That's the first thing I'm looking for. So in terms of my key level, I'm looking for a 15-minute fair value gap, right? It's that simple. All you're looking for is a 15-minute fair value gap, right? So for those who've been trading longer than a year, you'll know that this is the fair value gap, right? So that is the FVG I'm looking for. Now, when we look at the markets properly, right, when we understand how to use fair value gaps with accuracy, you're not going to take the actual fair value gap and drag it over like this. You are going to use a candle before the fair value gap, and you are going to use it as a key level. So what makes a key level? The first step is a 15-minute fair value gap, right? Used in this way. Right, so if we just kind of drag this over to the right now, this is going to be our key level. Now, the reason I do this is because I want to see the market flip at these areas. I want to see the market act as demand, and then of course this was a short trade, act as supply. And I'm going to be breaking down why this was a supply zone, why this is a good key level, and why the market essentially tanked down to here. Right, but in trading, if you can get your key level to be accurate, 80-90% accurate, the rest of trading isn't so difficult, right? So psychology, I say, is often a scam because you don't actually need good psychology to execute if you know where you are looking for a trade, right? So step one is where. So again, what makes a good key level? The first thing is a 15-minute fair value gap. Now, the second thing you notice for those who trade ICT is that we've had a sweep of the previous day high, right? So Monday's high over here was swept on Tuesday. Now, this is a classic previous day high sweep before the market tanks, right? So if anyone's been trading, what you'll find is that the best shorting setups will come. So this is the previous day high. The markets will spool towards buy side liquidity before selling off and targeting sell side liquidity. So this is something we can translate directly into the markets. And the way we do that is by simply using previous day highs and lows. Very easy. So this is the sweep that we had over here. This is now price taking out the Asian range. Sorry, not the Asian range high, the previous day high. Now, the other thing I want traders to understand is how to use the Asian range to your advantage, right? So using the Asian range is one of my favorite things, right? So what I call this is a two-phase manipulation. So once price creates an Asian range, like here, price will always create an Asian range. This is our accumulation, right? Price accumulates during the Asian session. Now, for us to take sell trades, right? If price takes out the Asian low and then rallies towards the Asian high, this is what I call a two-phase manipulation model. Now, this is my favorite type of manipulation model, right? The reason why is because we've taken out the Asian range low. So this is phase one manipulation or sell side liquidity. I'm just going to write sell side liquidity, SL. But we've also taken out the Asian high as well as the previous day high. So we have liquidity acting as a huge confluence here. And I love this. Previous day high sweep, Asian range high sweep, right? Asian range low high sweep, right? So we've taken out liquidity before our entry, which is of course at this key level. So if you're stuck on liquidity, focus on Asian highs and lows and previous day highs and lows. These are the easiest to use, right? So again, just to quickly break this model down, we have sell side liquidity being swept. We have buy side liquidity also being swept. And this is our key level to sell from down to here. So the reason I like this is because we've actually swept sell side and buy side liquidity. So we've manipulated the only two sides of the market, which is sell side and buy side. This is something I look for in my trading. It's probably my favorite manipulation model, right? So once we've gone through that now, what we can see is we have a sweep of liquidity, both previous day high and I guess Asian high and low. We have a 15-minute fair value gap. Now, the main confluence for taking the short on Tuesday came down to this over here. Now, this is the weekly candle, right? So PO3, if you just go to indicators and type in PO3, the one I use is this one by 2 degrees. So this is the weekly candle, right? Let's just position that now. So this is the week